Good afternoon. This is Craig Modelmog for the week of July 24th, 2020's Wall Street X's and O's. I'd like to welcome everyone. It's good to see everyone. It's been a little while. I don't know why it's been a while. I guess I've had a few things going on, but I've been kind of compiling information and finally have some good stuff to throw out there today. But to kick things off as usual, just as my disclosure that we are required to do, the opinions on this episode of Wall Street X's and O's are mine. They are not meant as a solicitation to buy or sell anything. Investments can and will lose money. And the real goal of this is just to inform and educate you and try to help you become a better investor. That's the underlying goal. That's my goal every day. You try to get better, right? For those of you, I'm really continuing to work on not slamming the table with my emotions and my passion, not rocking. I'm a rocker. When I was a little kid, I would just sit in the rocker and I was happy. What can I say? So this is like walking and chewing gum, doing two things at the same time. This should be interesting. So we'll get a shot here today. So anyway, I hope everyone is good. But we're going to kick things off talking about unemployment. First of all, we're going to talk about earnings. We are at the beginning of Q2 earnings, which are exciting. We're going to talk about COVID because why? Because we're just going to, because this is mask season, if you didn't know it. And then the last thing we're going to hit on is really where I think we're at from an economic standpoint. But to kick things off, we reported 1.4 and change new unemployment filings here this last week, which was kind of a disappointment, not a shocker, because what I've been telling you is that I think what we have seen up to this point has been a lot of blue collar layoffs. I think what is coming now that this shutdown and slow reopening, and in some cases re-shutdowns, is really starting to impact companies where now we're seeing more white collar layoffs. We're on the front end of that, I believe. And it would not shock me to see our weekly unemployment numbers really continue to creep up higher, which again is really sad, a really tough time. If you look at PUA claims, which again is pandemic unemployment assistance, this last week it went up 975,000. And again, these are people who are self-employed, freelancers, independent contractors. So there's almost 1 million of those in which we have been very steady here. We did see a dip back in June, beginning of June, down to 700,000. We've been slowly rising. We touched over 1 million first part of July. Now we're back to 975,000. So we've got basically a total unemployment benefit recipient on a regular basis for this week of 31.8 million people. What I want to tell you is you cannot have a recovery with this many people unemployed. I don't care what the stock market is doing. Right now, it is not acting like it should. And I want to throw some caution in there, okay? Some caution into the wind. Let's jump into earnings, okay? These are fascinating. This is as of, I think yesterday, 121 of the 500 companies reporting for people, and I have to scoot up here because I can't see, I have this big ass screen on my desk and I have these transition lenses because I'm getting stinking blind as I get old and I freaking still can't see. So anyway, I'm going to scoot up here so you're going to get to see a nice chin shot here of my face mask acne. It's fantastic. I think I'm freaking 16 again. I mean, it's ridiculous. You wear your mask, you sweat, and you get home at night and you have zits. It sucks, My kids are like, Dad, when am I going to ever start having breakouts? I'm like, never. I'm 52, almost 53, and still have to deal with this crap. So sorry to get off track here. S&P earnings. S&P 500 companies with greater than 50% of their revenues in the U.S. Earnings growth is down 45.4% so far. Revenue growth is down 8.2%. S&P companies with less than 50% of their revenues in the U.S. are down 41.1%. Revenues are down 16.6%. So that gives us an average S&P earnings growth of a minus 44% and revenue growth at minus 10.5%. So this is really, really pretty ugly. Looking at year to date here, if you break down all of the sectors, you see, I think someone's come in my door. So you see this is uncut and unedited, as you see here. Up, it's the ladies. The ladies here are great. They wipe down our door handles like a couple times a day. God bless them. Anyway, let's get back in here. If you look at sectors, there are 11 sectors in the S&P 500. Right now, year to date, your top performing sector, see, I can do this because I'm doing a drum roll, okay? You know who you are, who have told me to not slam. This is drum roll. This is not emotions and passion coming out, okay? So drum roll, tech, up 14.21%. Number 2 is consumer discretionary, up 6.6%. See, there's my phone ringing. Is it anyone I know? Nope, it isn't. So if that's you and you're going, man, I was calling Model Mog during his, and he didn't answer. I'm busy, okay? Frick, trying to work here. Anyway, here's what's crazy. Of the 11 sectors, there are only 2 that are positive. Okay, on the other end of the positive side, I'm going to give you the worst. Energy minus 37.02, financials minus 24.6, industrials minus 15.5, utilities minus 12.6, real estate minus 9.96, materials minus 8.04, consumer staples minus 7.05, healthcare minus 1.72, and to round this out, communications minus 0.97. So here's the question. How in the heck is the stock market up? NASDAQ, S&P kind of on the margins. Hold on, this gets better, right? And also, just so you guys know, I have sent a slide deck with the specific slides that I'm discussing because I'm trying to amp up my game, okay? I want to bring my A game. Okay, so we got a slide deck of cool things that I have found and thrown out there. Here's some cool stats on why is the market up when everything stinks. Here's why. There are 3 stocks, Apple, Amazon, and Microsoft, that right now make up more than 16% of the S&P 500, okay? And over a third of the NASDAQ 100 index. That is crazy. 3 stocks, okay? The last time this happened, dot bomb crisis in 2000, 2001, 2002. Great slide. Check that one out. If you add 2 companies to that, okay, Google and Facebook, that number jumps to north of 20% in the S&P 500. Since 1980, when's the last time that happened? Never. Interesting. Interesting. I'm not even going to say any more. I forgot we're going to talk about the U.S. budget. You know what, the U.S. budget deficit's terrible. So I'm going to skip that. There's a slide in there. It's terrible right now. We're spending way too much money. They're getting ready to cut another deal, spend another trillion and a half. I get it. We need to take care of people. There are small businesses that have been put out of business, not because of anything that they did. Okay, so part of me is like, you know what, the government should step in and say, look, we wiped you out, we're going to help you out, and I'm with that, okay? And that's a cool thing. On to COVID. Here's some stats where we're going to start, though, because this is a hot one. This has been politicized. Why? Because we're America. That's the crap we do in this country. Let's make it political, and then I have a platform to stand on. That's a bunch of crap. Let's just talk about the facts, okay? Screw the political crap. Literally, it's a bunch of garbage, okay? Bunch of garbage. Being political is not about taking care of people, which is what their whole stinking, I almost said something. Their whole stinking reason is for being in office is to represent the people. See, I'm getting on my bandwagon here. Anyway, I pulled some stats from the CDC, and this is going to add context, okay? Because there's lots of stuff flying out there about COVID and all this stuff. Oh, it's the worst thing ever. Oh, it's worthless. It's a bunch of garbage. It's not a bunch of garbage. I'm just telling you that. Annually, there are 9.3 to 45 million illnesses caused by the flu, okay? Influenza. 9.3 million to 45 million. That's an average. I know that's a wide swath. This is CDC numbers, okay? Hospitalizations, 140,000, 810,000. Deaths, anywhere from 12 million or 12 million. Holy crap, that would be crazy, wouldn't it? 12,000 on the low end, 61,000 on the high end. Okay, let's get to some stats here. COVID, 3.9 million cases, and they're like, oh, well, geez, there's lots of people that have it and we don't know. No offense, I've never been tested for the flu. Pretty sure I've had it, okay? Garbage response, just throwing that out there. Number of deaths right now, 142,000. So let's add some context. Again, I'm big on that. If the annual influenza caused illnesses is 9.3, let's start on the low end. That's 9.3. Right now we're at 3.9 million. Okay, that's a little over a third, and that produces anywhere from 12,000 to 61,000 deaths. We are at 142,000 deaths. Do the math. Okay, if we're at 3.9 to get up to 9.3 million, which is on the low end for influenza, we're talking deaths of north of 300,000. Do the math. It's just about the math. I don't care what you think or what you say. It's about the math. And I'm telling you that this is something we need to be cognizant of, okay? We're seeing new cases rise. Why? We are testing more. What did I tell you the last time we got together? Testing is a leading indicator. Don't focus on the leading indicators. Sadly, all of our policy is being driven by leading indicators, okay? Testing, leading indicator. Number of contractions, leading indicator. Lagging indicators. Ooh, here we go. Hospitalizations and deaths. Hospitalizations follow normally 2 weeks from being when contractions are noted, and deaths are 2 weeks after that. Right now, we are seeing new cases rise. What do we need to anticipate? Focus on hospitalizations and deaths, not to be morbid, but that's what we need to track. Sadly is this drives home why we need to do the right thing. There's a big thing out here on mask, no mask. Is there enough studies out there to really know? Yes, no. Here's what I will tell you. In countries where they have committed to wearing a mask and not politicizing, you know what's happening? It's going down. Say no more. If you don't believe me, go do the research your damn self, because you're going to find out that is the truth. I've got another great thing about outbreak, the evolution of it and what that looks like. The United States is terrible. We're the only country where you can't make me wear a mask. Are you kidding me? Seriously? Golly Moses. Unbelievable. Just because we have freedoms doesn't mean we should do it. That's called use your damn brain, okay? People kill me. I'm getting fired up here. I've also got another cool thing on testings to new cases to hospitalizations to deaths, okay? Let's focus on the facts. Don't get excited. I'm not trying to create fear. We need to be informed, okay? We need to do the right thing, and we need to take care not just of ourselves, we're doing it to take care of others. I don't want to be the guy who passes it on, okay, because I was an idiot. I don't want to be that guy, all right? I just don't. I really don't. Anyway, moving on. All this stuff is really funneling into the economic situation and how are we handling it from an investment standpoint, because as you know, that is really what my focus is. Right now, we are in a period of time where we have GDP, which is growth, which is declining. We have unemployment going up. We have demand, which is for products, services. What's happening? Yes. And we have inflation. We haven't been talking about inflation on the news, have we? No. That's because these people aren't focusing on the truth. They want to sell crap to us, okay? Inflation is rising. You know what? In the CPI numbers, which is inflation, all right? One of our previous presidents, I'm going to be non-political here, in the past, took food and energy out of that number. Why? Well, you can freaking control it more if you don't have energy and food in there. Oh, well, that's where we spend most of our damn money. Yeah, that makes a lot of sense, doesn't it? It's rigged. I'm telling you, it's rigged. Or as my son and I laugh about, one of my favorite words is, it's a scam. It's a scam. What is happening to food prices? Have you been to the grocery store? Did you know in the month of June, all of the ag commodities up, oil up, okay? We're seeing gas prices, those are going to start rising. Grocery store again, getting more expensive to go to the grocery store. Here's what is sad. We have a government that's flooded the economy with liquidity. Okay? That's the Federal Reserve. We have a government that's sending checks to people to try to keep people afloat and keep things going. What that is doing, it is driving down the value of the US dollar. Pull up a chart of the US dollar relative to other currencies. You know what's happening? The dollar value is going down. You know what has to happen if the dollar goes down? The price of commodities goes up. We've seen commodities wake up from its slumber of more than a decade, people. Okay, so in an environment like this, and I also put a really cool chart about the total market cycle or complete market cycle. Ooh, I did one rock. Oh man, I'm doing pretty good. You know, that would have been an equivalent of walking and chewing gum and stumbling for a moment. I've regained my composure. Anyway, I look at investing for a full market cycle. We are entering what I call stagflation. That is the technical term for growth that is going down or slowing or decelerating, and inflation that is accelerating. Okay, what do you need to own? We need to own tips. We own tips. Okay, we need to own gold. We own gold. We need to own commodities. Added it today. Broad commodity index on our models. We own commodities. Why? The government is not going to slow down on bailing people out. They can't. Okay. They've got to keep things, or we're going to have more riots than what's going on in stinking Portland and these other stupid cities. It's crazy, okay? So we're going to see continued devaluation of our dollar. I want to be sitting there prepared, owning the things that we need to own. Utilities are another one I'm eyeing. Technology, which we already own. We're already doing well in technology. And then another one, what's the other one? Dang, I've got my little cheat sheet here. REITs and healthcare, obviously. Okay, so those are things that we're most likely going to start seeing enter our portfolio as they become into what I would say a good buy zone. Right now, we got a lot of volatility in the markets, and I'm just not willing to really dive headfirst in yet, but I'm watching very closely. To close this out here, I read about a cool thing called the Cobra effect. One of my good friends, clients up in Anchorage, Alaska, you know who you are, talked to me about this, and I'm like, wow, that's crazy. I did some research. Basically, the term Cobra effect is an anecdote that describes the occurrence during India under British rule. And they had a serious cobra problem in Delhi, okay? And they said, hey, we've got a brilliant idea. For every dead cobra you bring us, we're going to give you a bounty. So you know what happened? People just didn't go out and start killing cobras. They started breeding those crazy things. Pretty soon the government caught word of it, going, oh, wow, you turkeys tried to outsmart us. You started breeding them, killing them, and bringing them. Well, guess what? No more bounty. So what all the people do? They let the snakes go. Whoops. Happened again in Vietnam in the early 1900s. They had a rat problem. If you get to China under Mao Zedong, this is late 1950s for you history buffs, they had a goal to remove mosquitoes, rodents, flies, and sparrows because they were the great contributors of disease. You know what happened is they wiped out the sparrows and these other things, and the sparrows became a major contributing factor to the Great Chinese Famine. If you don't know what that is, look it up. 30 damn million people died. And oh, by the way, the Chinese didn't report on it for 30 years. Yeah, we're fine. We're good. We're doing good here. COVID in China, you honestly think their numbers are right? Garbage. Anyway, you got to love it. You got to love it. In closing, as Paul Harvey would say, looking at the Cobra effect, we got lots of handouts being handed out. All I'm going to say is now you know the rest of the story. Model Mog out.